Trying to raise capital for your startup can be an energy-sapping trial-by ordeal, but help is out there to make sure that you don't make rookie mistakes that could hurt you down the line.
Yeah, so starting with, for example, if you're a CPG brand, your entire value is your brand portfolio.
Right.
Most founders get it, but sorry to break it to you if you don't. General Mills can reverse engineer your product.
Yes.
What they're buying is your brand. And you don't have a brand if you didn't file trademarks and protect your brand. So absolutely do it. Do it early and do it often. Patents aren't as easy because a lot of companies may have intellectual property, but it's not intellectual property you can patent. Let's say it is intellectual property you can patent. And there are patent experts who know way more than I do about patents, to be clear. There's still a discussion to be had about whether it's worth the money at that stage of the business and whether you want a patent which will eventually be public or whether you would rather just protect the IP as a trade secret or in some other way.
So what are some of the important, turning this on its head now, what are some of the questions that founders should ask investors rather than the other way around?
Yeah, so why are you interested in investing in this company? Of course, say that in a way that's not insecure, and why would you invest in me? That's interesting to know. If you're talking venture fund and later investors, you want to know what's their plan. Do they need to exit within a certain amount of time? What are companies like yours they've worked with?
I think with founders, it's really about what is your business model, right? If your business model requires certain aspects and you're looking for that from investors, you should really line that up before you get in the room, because you want to make sure that their equity is addressing as something that they also are interested in, because they're also probably going to open up pathways. The other thing you want to be very careful of is founders that want to take a lot of control over what you're doing, because I think that can become very difficult. So it's two-pronged. One, you need to be really looking for founders who are sharing the principles that you share in terms of how they invest, but secondly, you don't want them to also look to control your business, because that also can be really negative.
The first is that money is wonderful, don't get me wrong, and we all need it, but what is the support you can bring beyond the capital? How can you or your team help accelerate my business? The other thing I always suggest to founders and teams is ask to talk to other brands in their portfolio, because you want to know from brands who, and not just the brands that have had the great success, but the brands who have struggled. You want to know what it's like to work with your investor partner when things are good, but you also want to understand what it's like to work with them when things are rough, because that's really telling. It's a very intimate relationship with an investor, and you have to really validate that they're the right ones for you. We talk a lot to our brands in our portfolio about really building like an investor avatar. What you want, how would you describe this investor, and the level and the way they interact in your business, and then have conversations with those investors as you interview them and do your due diligence on them as to how they foresee themselves interacting. And if they're not aligned, then even if they're going to give you money, it's probably the wrong fit.
So, big picture, how hard is it to retain control of your destiny if you take on outside capital?
It's definitely manageable to retain control of your destiny. If you've managed dilution effectively, you'll probably control the board and most of the stock, other than kind of some veto power your investors will have. And even if you haven't done that, if you are invaluably good to the brand, you will be able to maintain significant